Okay, I've just shared the link to the group. Good morning, good night, good evening, everyone. Hope you're having a good day. I'm having a good day. Woke up earlier than usual, so let's see what we can do with the market. Let's try to check bookmark today. The last time we streamed order flow, I had a connection issue, so today let's try to do that as well. Please let me know if the audio is choppy because Bookmap is an application that tends to consume a lot of resources. My PC is sort of mid; it's not fantastic. So when it comes to streaming, at times the audio can be choppy. So just let me know. What I was doing that I sent you the levels before. I want to show you uh, the process, how I was setting this up, how I was marking the levels. Well, we don't need to go about the whole pivot system again because I've explained it like 1,000 times. But I want to explain a few more ways to add levels to the chart. I'm using this. Sorry, I'm using this sort of gray lines. These gray lines that represent the value area of certain important periods according to my system. And it's important to use them in a particular lengths and in particular time frames as well. For instance, you can see here Q2, which is the current quarter we are in, value area low, um, Q1 value area high. We have levels below, but they are not super relevant because market is trading around here. But I was mentioning Q2 value area high will be right here. So what I like to do in this regard is to first of all use the VWAP bands on the 4 hour time frame. I like to use the 3 month, sorry, the 3 month, the quarterly VWAP, and I turn it on. And as you can see, we have the value area high here, and the value area low here of what of the current quarter. This is Q1 2023. As you can see, we have talked about this a lot, but it's nice to review it. We started the year massive move higher, full reversion. Oh, surprise! We not only bounced from exactly by Q4 2022 value area high, sorry, but we created a fantastic rally and look at the place that was flipped in order to create this last part of the rally. Why is this important? This is important because it's a useful framework to play ranges, and this is basically part of the auction market theory as well, which is the main framework I like to use for trades. If you pay attention to what would be the most probable trades to make and the ones that give you the biggest extensions, it's probably not to trade this chop. This chop is maybe ideal to trade some 3 minute rotation or 1 minute rotation, but if you actually want the juicy swing opportunities, you want to use maybe this time frame. I have found the 4 hour is the ideal time frame. Sorry, is the ideal time frame. The daily is not as granular to use with the quarterly VWAP. Don't use the quarterly VWAP because it allows you to see a flexible range to trade around. For instance, this is of course hindsight, but there was a reason to believe that this could be the end of not the end, but the beginning of a big move or at least of a rotation higher. Why? Because Banket reversed the entire VWAP at the time, and there you had two options. This is quite important. Um, the The first option was to basically create a mean reversion that would have been something like this. When price failed to sustain an auction within a current value range, value area, the only other possible path is to create a mean reversion. I talk a lot about mean reversion because I think it's the easiest way to trade. Um, of course, you can trade breakouts and whatnot, but the framework for mean reversion is clear because it's either you it's super and it's invalidation. What I mean, it either fails to sustain a level and you get a full reversion when once price is within a previously known value, you have a framework to say, okay, this is my limit. I will put my stuff here and I will keep this trade as long as it's within this range because the market will tend to gravitate towards a previously known value. It will tend to gravitate towards if this value, for instance, is lost, this one, the the previous VWAP, sorry, price will go lower, and then maybe here this could have been our new bottom. Who knows? But the important thing at the time was that never happened. We had a rotation higher. But why is important here? Why is important now? Well, if you see how the market is developing at the moment, we are May. We are almost 2 months inside Q2, and this was a quarter of mainly ranges. We didn't have much action. Of course, we had intraday volatility, but after the huge move, after the inefficient move, if you remember, we like to call this inefficient. After this move, the market had a lot of consolidation. It didn't really make much. Which, if you remember, we also talked about that discussion back in the day. We say that the ideal situation for the altcoin market would be Bitcoin entering a stage of consolidation. First is a wide consolidation, then it gets compressed, then it gets a big move. In any direction, it doesn't matter. The compression of volatility always leads to a big move. You can check this on the VWAP chart as well. Use it on the daily. And remember, this is not a chart you make TA on. You please don't do something like that. Yes, it makes sense to signal the fact that volatility is lower, but think about this. Think about volatility as if it were the electrocardiogram of Bitcoin. This is Bitcoin's heart rate. It doesn't work like a regular chart where you can create a wedge and so on and so forth. I mean, if you want, you can do it. No one's gonna blame you. But this is in nature. Volatility is a mean reversion subject. I don't know how to say it, but volatility works has the mean reversion feature built in, so to speak. It's the nature of volatility. Because volatility is what the market decides to go heavy or not heavy on one side. On markets such as the ES, we are having also a period of very similar consolidation. I think I had some levels on this. There you go. We had a level of similar consolidation. We had big move, although their move, you might argue, was much efficient than ours. Because on Bitcoin, if you remember, we had a huge rally, and then basically the chop. Here you have an orderly sell-off. Look at how the market covers every gap. This is the only one that is uncovered right here. So you can expect that in the event that here we have big move, lower wick to cover the rally, we have another fractal, a little part right here that is all to be covered in my opinion. I think ES is going to go higher, to be honest. Yeah, let's use it on here. Yeah. If you remember if you remember what we're discussing about outer market theory, look at this. What do we have here? This is the top of our range of Q1, of 2022 VWAP, and this is 2023 VWAP. Price is trading above VWAP, and as we mentioned, we still have a sort of a gap right here that wasn't covered. It wouldn't surprise me if price, instead of going lower, manages to get a flip above this key swing high, manages to at least touch the value I have 2022. Maybe we can expect this rejection to take place here, and in the event of this holding, I think we're gonna have a final move. Maybe we're gonna historic double top right here. Who knows, no? But you gotta make a plan. Anyway, we don't trade ES. It's just a chart that I like to see for context analysis. We trade Bitcoin for the most part on this channel. Maybe I never explained this, but I want to explain it now. That I trade Bitcoin mostly because of it's easier to watch the order flow. I've tried a lot to use order flow in other altcoins, for instance, using CoinAlyze and whatnot. But for the tool that I like to use the most, which is Bookmap, um, the auction is not very clear on altcoins on the 1 minute, 3 minute chart. So I do prefer to scalp use the on Bitcoin, only on Bitcoin. Maybe when the time is right and when some altcoins have better liquidity and less prone to scam moves, such as the ones that we've been seeing, I will use it for scalping altcoins. But I try to be consistent as well with my approach. For the most part, I want to become a good Bitcoin scalper, even if it takes me years. I think I will, and I'm working towards that as well. So we were using the quarterly. Let's just finish this analysis right here. So what we were discussing was the possibility of the market now being at an inflection point again. Why? Because it is flirting with entering its current VWAP. Remember, it's similar to the situation we had here. It's flirting with re-entering the VWAP, and it finally did it. Here it was flirting with entering again and flipped and went higher. So this was also a terrible period of consolidation trade. This wasn't fun at all. And the reason why it wasn't fun at all is because it is at the rise of decision time, so to speak. The market had to decide, the market is undecided, well, you expect. In this case, what we have right here, right now, is previous quarter reject. But the auction is not strong enough even to re-enter its current range, its current value area. So that tells me, for the time being, the market has no real intention to trade directionally. That's why you are also seeing areas of the market, such as the meme coins and such as on-chain activity, have some period of calm because Bitcoin is basically not doing anything. And what surprised me a bit is the fact that some altcoins are performing well, but not all at the same time. You know, I think alt season was actually cancelled cancelled this year because of that. It's very sparsely um, distributed. I don't know if it's because of the market not having enough hype, like to pump all at the same time. But I remember during 2020, during the 2020, July 2020, was around this area. Market did something very similar. Let's just review it real quick. Um, where was that? Was around here. Of course, the bull run at the time didn't even existed, but if you check at this from the fractal type of analysis, we had COVID bottom, blah blah blah, chop 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 chop, and look at this. I remember this. This was the most boring time ever. Like absolutely boring. It was terrible to trade. But the market eventually went higher and created something similar to what we're seeing now. If I show you this, you can actually say, okay, this looks like the auction we're having at the moment, no? And you might be right, and the same principles were respected. Failed to failed to flip a value area high and reverse it to value area low. And where was value area low? Well, it was in this case pretty close to value area high. Market front run it, big rally starts the bull. Am I saying that's going to happen right here, right now? I don't know. To be honest, I don't know. But if we zoom out and we consider this price point, we are at an area. If you remember, in a previous stream, we also reviewed this. Sorry, we also reviewed how this price was going to present some battle for the bullish continuation. It's not that easy. It's not easy to flip a level because you have to convince a party to flip a level, and you have to remember price will never move if people just don't buy. It's just as simple as that. It's quite easy. Um, so you have to give an incentive. For the time being, the only incentive for price to move higher, in my opinion, should be or could be. Let's just be it doesn't owe me anything, right? Could be the ES actually flipping that level that we mentioned higher. That would be cool. And the other that we must absolutely must see is a regain of at least its current value area. If you cannot even enter your value area, this is weakness. This is absolute weakness. I mean, maybe buyers entered here because it was the first touch of the value area high. The second one, okay, strong enough. But if the market that has no fuel to even enter a current range, a recent range, it will go low. Eventually, it will go. It's difficult to time these things. It's difficult to make a directional decision when the market looks like this. That's why if you want to trade volatility, remember price is fractal. We can simply lower the time frame and see if there is some actual tradable is structures. For instance, on the 30-minute chart, I like to use the weekly VWAP. We turn it on. There we go. Previous week value area high. Previous week value area low. And the pivots. Okay. Previous week VWAP, which is untested. So maybe if you are looking for a stinky read, something like this could work. Or this quite the wide stuff, but it's 30 minutes. 30 minutes is not a madness to try to play something like this. Or at least a mechanical, there are static orders right here. I'm pretty sure. Check this. Failed return area. So yeah, this would probably be the best place from the price action structure wise. The best place to be in this time frame, of course. But I am not super interested in trading the 30 minute at the moment. Why? Because it's very choppy. It's I don't know. Last night I tried to short this. Was it? Yes, I tried to short this, and I took a small loss because I was super convinced that the market was going to squeeze us, and I will show you why. For scalping, let's turn this down, off, because we already have the levels for the value area. For scalping, I start with 30 minutes to more or less see the context, maybe turn this indicator. The trend might be changing right here. What about this? Absolutely, this would make sense. But still, the structure is very, um, it's very wide. There are too many ways to like to trade it this way. So I prefer to lower the time frame. Let's go with 15 minutes. This trend looks like it's about to get flipped. Look, the more far away price is from the trend, the strongest it is. Now it's getting close. It's getting close, and it's getting close to get flipped. So we're at, remember what were we saying before? Key contextual level, the trend flipping, something like this. Bulls have one chance to regain Q2 value low. If they enter, they can keep fighting. So it's a back and forth. This is the anatomy how you can analyze price action during times like this. 15 minutes in any case is not what I like to use for intraday rotations. I like to use 5, 3, and 1. I'll tell you why in a second when I turn on bookmap. Look at this. This is when the trend following indicator starts to get choppy and not useful. In this case, fantastic use of the trend following indicator. The trend, remember what we said. Trend was strong, first touch at contextual area, boom, move, big move. Why did I want it to short here? Well, because the trend had the trend was around here. I didn't enter it. Was around here and started to think. So I wanted to preempt a move. I wanted to try to get the move before it happens, so to speak. So I called a short. I called the short. This was my entry. This was my stop. Sorry, this was my stop. It would have gotten stopped, and I decided to cut it here. I decided to cut it here because even if the trend was starting to come lower and we were at a very important level, I mean, I didn't short the hit because I just was bored. I short the hit because there was a reasonable area to expect rejection from. It was an area that I thought, sorry, was an area that I thought could provide some form of rejection. What was the issue right here? Well, first of all, trend follower indicator during a chop is not very useful. It will give you false signals. Look at this. This was supposed to be a trend follower indicator, was red, was flipped, boom, stop it. Maybe this will work for a little bit. This could easily get invalidated again, even though there is a green trend, so to speak, right here. So the lesson with trend following indicators and any type of moving average is that they are fantastic during trends. When you see price going vertically, go for it. Beat the first big test, especially on full suite because we know it's a very responsive one. It's a good, even here you could beat. Um, what's the issue with this? The moving average, remember, is still a moving average. It's a moving average that has to calculate the previous candles opening and closing and do an average, an average, and give you a line where the trend could go. But there is no trend, so you will be more often than not entering at random places. This is why we turn it off during chop. So okay, as I was explaining, I call this short right here, and I cut it here for a small loss. We avoided the loss and the slippage. Look at if this week went so high, it's because there was very little liquidity. This is one of the issues on why I'm cutting trades earlier. It's because I don't want you to lose another R just for the sake of it. I mean, if we didn't manage to catch a very extended move, there is no need at times to get exposed to losing a lot of money on these conditions. And the truth is that you and me and everyone wants to trade. We all wake up every morning or come back from work and want to trade, and you see the market doing this and say, okay, what the fuck? What do I even do here? What are my tools to place trades? Well, if you're a scalper, you might have some fun having playing some little rotations at key contextual levels. For instance, here you say you can say price is completely failing to create a rotation higher, so I will decide to go short. I will decide to go short, and this is my target because here there is a zipper type of price action. There was volume accumulated right here. Okay, do you think this is worth it? Where do you think? Are you sure? Most important, are you sure you're wrong if the market does this? What if it does something like this? So even if it's incredibly boring, at times you have to be away from the market, and that is just the truth. That is just the reality. So that's what I've been focusing on. Also doing the options trades. Remember, we have the challenge account on here. We still are at more or less 40% gain. It's not much. It's not little, but this is a long-term challenge as well. Um, I bought two puts on Ethereum because I consider that price can easily go lower from here. If Bitcoin goes down, Ethereum is going to go down. If price decides to actually do this move, we're going to be exposed to a large, well, even though we could be here, we're going to be exposed to a large volatile move. And remember, what happens, we are anticipating that volatile move to happen at some point. We are not just saying it's not me and John and Michelle and Eli and even people that likes to trade that is anticipating that is not for I don't know. It's for a reason. So then the reason is that we have seen this before. We know that when volatility compresses, sooner or later a big move will come. But if the big move comes and goes higher, that would be fantastic because would be losing $40 on this, but Ethereum is going to go higher and it's going to make up for that. If Ethereum is going to go lower, we don't want to be holding it back that it has less value than before. And yes, it will be less safe because we will be losing the money of the puts. Sorry, we will be losing the if ETH pumps, we're gonna be losing the money of the puts, which is $40, but it's going to appreciate at a higher rate. So we're going to be around $1,500, something like. Which to me is okay. I think it's okay because eventually, when we reach 10K, we're gonna cash out and we're gonna start again. It's just a slow process. You have to take it that way. That's why I think you have to also sort of take care of your time, make a good use of your time, so you don't go mad, so to speak, in this one. Then I wanted to show you one other thing, and this is not an idea of mine. This is something that I've been learning from Guru, which is a fantastic dude, and I love him, and I'm very thankful that he's on the group to teach us, which is the use of Fisher. These are the configurations of his that he shared on his channel, and I've started to test this on 5, 3, and 1 minute charts during this whole chop and try to pick potential reversions. I don't. I want to say this very clear. This is not a system that I discovered. It's his work, but the fact that he also shared it with the group, I think, makes it publicly available. And my recommendation is go to his channel and try to study it because it will help you. It will help you, especially if you are a mean reversion type of trader. It's going to help you a lot. The reason behind Fisher, if you don't know, is that it's a way to sort. So let's see. Let's just do this real quick. Fisher transform. What's what's the use of Fisher? The main idea, don't bother about this, and this is public information, is that you want to check for turning points on the price action. Why? Because this is a tool that allows you to, given a certain um, series of candles, it will give you the price that is most deviated from the mean. And what do we do when we scalp BTC? We try to get trades that are overextended, and we can play a mean reversion. So let's have an example. Last night, I considered that this price action right here. Why did I call the short last night? Because I consider that this was a turning point on the 5 minute Fisher. Um, it was eventually a turning point, but we also have to take into consideration that this market is very scammy at the moment. I mean, we trade crypto. We're not trading a perfectly efficient market. We're trading something which is quite difficult to understand. And many times, certain strategies that work on traditional markets, for example, won't work with us. So that's why we also need to use our own criteria. For example, right here, price had a spike, a shortable spike, so to speak. So if you entered right here, and why you entered right here? Well, because this was a contextual level, isn't it? This is a daily pivot, okay, and you have a tool that is helping you find a reversion turning point. Sorry. Okay, what if you shot right here? Uses or even right here. Maybe you use the trend following indicator because, of course, at the time you didn't know it was a reversion. You use the trend following indicator, and yeah, just to be safe, you do this. Well, you got, and where do you TP? Here. Why? And to return area. You get to mash all of your okay, you never reached that place, but uh, as an example, you could have maybe taken TP before. Although we don't know actually if this movie is finished. Maybe price actually goes lower and ends up reacting around this area. Remember, we discussed that before. So what's my takeaway with this? Indicators, uh, trading strategies, order flow, any tool that you use, you have to use it at your own discretion. But we have the fortune to have certain people in the group um, that can teach you certain things that work better than others. And in this particular example, I believe that this tool, the Fisher tool that Guru is teaching us how to use, is a good tool to add to scalping. And if you combine that with the pivot system that we use and the value areas, I'm certain that we can get some really good scalps. So I'm going to keep looking for those opportunities to trade, and I will keep calling those trades because I think they will benefit us, and I think that's the goal of the group, that we all trade together and that we all make money, and that yeah, we're gonna lose money at times as well. But the thing is, if you're taking this as a long-term process, those accounts are going to grow, and that's the realistic way in which I think we can see um, different trading styles. So now to finish, I want to show you a quick a quick rundown of how to read the current price action using Bookmap. So let me find Bookmap here. Here's when the audio is maybe going to get choppy, but it's okay. Let's just try at least. This is Bookmap, as we were watching last time. Remember what all of these little bubbles right here? This is us. This is us trading. This little one is my small scalp. This big one might have been a liquidation. We don't care. All we care about is that the market is showing us different type of interpretations. Sorry, the market is showing us the moves and how they are created. For instance, this move right here. Let's analyze. This was what time was this? What time was this? Was 11 something. Yeah. Oh, yeah. Here it was this move right here. From the price action perspective, we can say this was a turning. Remember, a turning point. Fantastic. A turning point. Maybe you can even make the case this was a deviation. I should ask you about this thing. We had a strong buying tail and a move higher till when? Till where? Well, we had a move higher till the price actually faced a level of rejection, which is Q2 value area high, value area low, sorry, and the previous week value area high as well, which is where now the price is struggling. Okay, let's dissect that move on book. Turning point, we have this move that sends us lower. A lot of selling. We don't care if the selling was just market maker, whatever the fuck. This is just a lot of selling. Just think about that this way. You are not interested in seeing why the move happened. By the time you discover why the move happened, it's already late. You want to see very basic confluences for all. One is exhaustion, another is absorption. Here we see exhaustion. Why? Because selling, you can see it right below here as well. Selling was reasonably high up until, and also most importantly, buying was not high enough to move price higher. That is also part of the auction. Even though the market was pretty thin at the time, on the bid side, because we don't see sorry, on the ask side, we don't see many sell orders right here. We see most of the book being populated right here. Even in that case, selling was the stronger hand. So the market reaches a point where selling was initially absorbed, and on the next move lower, selling was not strong enough. Here you go long. And of course, you can use order flow to make an assumption to when is the correct timing to enter and if the auction is on your side. Here, use take stop. I like to use take stop in these conditions. You catch a nice move, you go home. And this is it. Why? Because we are having the same configuration right here. Price reaches a point where, look at this. This was pretty interesting because the thicker side was on the ask. See, this is even a spoofing. Look, this is not even real liquidity. When the market because look at this, market manages. This was supposedly to be a strong liquidity at the time, but the market manages to execute with very little buy volume in basically a void. That's why price moved from. If you want again, if you want to know why price move, well, this you and me and everyone trading around here is trading on empty books. This is an empty book. At the time, the market had nothing, even reached around here. So maybe this is not your thing, but you entered. It's very difficult to do as a human being, but algorithms work more or less like this. They fill a trade right here, the directional ones. They fill a trade right here, have a one tick stop and a three, three ticks, tickets, what each one of these $10 level. 3 tick TP, and you make more. It's a very crude way to see it, but it is the way the market is working at the moment. It's just a reality. In any case, oops. Same case here. What do you think this price spiked so much right here? Well, it spiked a lot because there was no one on the other side to stop it, and as you can see here, the buying actually becomes strong. But as everything, and as we were discussing before, selling stops, and when buying stops, and when buying has another opportunity to create a higher high, it enters with even less intent, with less force, so to speak. This is less volume, there is less delta than here. So of course, price is not going to move higher. Not there is simply not enough buying power to move price not even one or two ticks. So the incentive when price goes right down one tick for buyers is to say, you know what, this doesn't look good. I'm not going to bid, of course, and see. And if buyers don't bid or bid lower, that's the opportunity for sellers to start fading. The market the market is not magic. It's this constant back and forth between buyers and sellers fighting each other in the order, and that is the market. It's not. It's fantastic. It's fascinating. I know if you notice, but I get like quite excited with this part because to me, finally understanding what makes price move is what made me understand that it was my responsibility if I wanted to make any money on this market to learn this shit. This is the very basic of how maybe you don't want to be scalping $30 moves. That's maybe not for you, but it's important. It won't hurt you to learn these things. And I think that that's a valuable lesson in understanding order flow to the microstructure. This microstructure level going to be amazing. It's going to help you a lot if you catch up with this. So let's go to the current action, and this is the point of control of the day. This is the view up of the day. Relatively unimportant, but um, I tend to use VWAP and point of control of the day. For instance, here, why was a good long? Why this was a good long besides the divergence, besides the fact that the selling was exhausted and there was some intent of buy. Even if you catch the trade here, it's a good trade. Why this was a reasonable trade? Well, because price, remember, mean reversion. What is the mean? This is the mean. We were overextended below the mean. Go back to the mean because we are in a ranging market. Overextension above the mean. Go back to the mean. And now we're chopping around the mean. So that's why um, that's why it's not usually a really good idea to bid or to ask if you enter here expecting a breakdown, which is something I often do. Don't worry, I'm not saying I'm perfect. Um, you have 50-50 chances. Sometimes it would work. Sometimes you are just gonna get stopped because the trade doesn't care. It just whips up. Around the VWAP and the POC of the day. There's more often than not the chance to get chopped. You want to avoid. So you can tell me now, okay, Ben, but what the fuck do I even do? I want to trade. Okay. You either get comfortable trading this, which you can do, of course, no one say you can't, or you start to zoom out and say, okay, I have my levels, I have my bias created by maybe the weekly. Remember where was this? Remember the Doritos. The Doritos to me say, that, okay, if you don't go back, and I want to be clear, I'm not just plotting indicators and making assumptions, but I'm trying to use the tools that I've been using for a long time and that I've tested in certain templates. They work. This sheet printed 4 times ever, and the 4 times was right. So I will believe that unless the market actually surprises me and clears this failed to return area and all the other analysis that we made, uh, there is not uh, a strong case for being bullish right here, right now. So, if you want to trade that way, if you want to, maybe you're a trend following trader. Okay, you say, look, you know what? I think this looks like I will disregard this, and this looks like a trend continuation, so I will play the trend continuation. Perfect. You're a person that maybe has not much time to trade. You invalidate here, take profits here, and you wait a year for this to play. It's going to be fantastic because that's something that fits your view of the market. You know, there's no need to be trading 1 minute rotations or to learn order flow. You just have to do what you feel fits your lifestyle better and what you think makes sense to you from the technical standpoint. We of course like to present content and to trade every day because it's something like we have some addiction as well, and because that's also our job. I mean, people from the group is there sharing their content because you guys are here to listen to us. So we want to do our best. But if things are not really working at the moment for certain styles, you have to be patient until that style comes back. For instance, you are a trend follower person. Okay, be patient until this trade plays out or not. You are a person that likes to trade mean reversions and consider the trend is going to get invalidated at any time, and we're going to have a sorry, and we're going to have a mean reversion. Perfect. Wait for the mean reversion. Wait for the 25 level to get touched. Then consider to go long. You know, it's just about that. Be patient and try to find what works best for you. That's gonna save you a lot of headaches in the long run. Honest. And I think you're gonna do much better. So I'm gonna be wrapping up. What are the plans for today? I will now go for a run or something. I will be working late today as well, so I will be on the group um, during the Asian session as well till I go to sleep. And plans for today, I will try to catch another scalp, but it all depends if the market is kind enough to present me with an opportunity that is not an absolute scalp. You told me the other day that if I called scalps, you wanted to participate on that. So I'm gonna try to get those during the day. Bear in mind what I told you. No, I mean, look at this. If you're not able to cope with some frustration, if we get stopped on a tick, please don't take it. Wait for a little bit longer, then we get something more. Uh, More tradable, a more kind market to trade. Or you can, of course, trade at another trading style, or you can, of course, not trade and try to focus on a higher time frame. Your decision. Right? my role here is just to share what I know and what I think can help you, and mostly to educate as well. I like to fulfill that role. So hope you like it. Hope the audio was okay. I felt good today, honestly. I had a nice day. So I will continue with my day now, and I see you later. If you have any question, let me know. Hope you're good. Bye bye.